All right, buckle up, America, because your holiday travel plans just got hit with a major turbulence warning. One of the nation's most well-known budget airlines, Spirit, is in serious trouble, and it's about to shake up the entire travel industry. We're talking massive flight cancellations, big job cuts, and a future that looks incredibly uncertain. If you fly or even just care about your money, you need to hear this right now. Spirit Airlines, those planes in bright yellow you see everywhere, is slashing a huge chunk of its flights this fall. We're talking about a whopping 25% reduction in their November schedule alone. Imagine a quarter of their entire operation just gone. This isn't just a minor adjustment. It's a desperate move by an airline trying to stay afloat and become a more efficient company. They're trying to literally shrink itself into survival. And it gets worse. This isn't the first time they've done this. Their capacity was already down by a similar amount when they first came out of bankruptcy back in March. So these new cuts, they're going to be even bigger and broader in scale than the previous ones. The airline is actively optimizing its network to focus only on its strongest markets, essentially pulling out of less profitable routes. Here's the kicker. Spirit just filed for bankruptcy protection again in late August. Yes, you heard that right, for the second time in less than a year. They first sought Chapter 11 protection last November, after years of losing money, failed merger talks, and heavy debt. They were the first major U.S. airline to seek Chapter 11 since 2011. They briefly emerged in March after creditors approved a restructuring plan, but clearly that didn't stick as further money problems caused them to file again. This second trip into bankruptcy territory is a major red flag. It shows just how deep their financial problems run. The airline CEO, Dave Davis, has been upfront with employees, letting them know that these significant changes will absolutely mean job cuts. It's not just flights vanishing, it's people's livelihoods. Spirit has already furloughed about 270 pilots and even demoted another 140 of them back in July as part of their efforts to save money. Earlier in 2025, they laid off around 200 employees as part of their previous attempts to escape bankruptcy. Now, with this new round of cuts, more jobs are on the chopping block. The CEO openly stated that these evaluations will inevitably affect the size of our teams. They're currently negotiating with union leaders, and more discussions are planned in the coming weeks. The Association of Flight Attendants, CWA, has already warned staff to brace themselves, saying this bankruptcy will be much more difficult than the last one, and we must be prepared to act to protect our interests. This clearly adds a lot of uncertainty for thousands of team members involved. Some flight attendants have even taken voluntary unpaid leaves of absence. So how did a major airline get into such a mess twice in 1 year? It's a perfect storm of bad luck and tough business decisions. First, rising costs have been hammering Spirit. Everything from fuel to maintenance is more expensive, driving up their operating expenses across the board. Then there's falling demand for domestic travel. Americans are tightening their belts and rethinking travel plans. Ongoing uncertainty, partly tied to things like tariffs and budget cuts, has caused travelers to reconsider their plans and tighten their budgets. People aren't flying as much, and when they do, they're looking for the absolute best deals, which puts pressure on budget carriers like Spirit. And let's not forget fierce competition. Airlines like United, Frontier, and JetBlue are all fighting for the same passengers. When Spirit pulls out of a route, guess who jumps in? Their rivals. United, Frontier, and JetBlue are already announcing plans for new flights to try to snatch up Spirit's former customers and fill those gaps, further eroding Spirit's market share. A big part of Spirit's recent downfall was a failed merger with JetBlue. Spirit executives really saw this merger as a way to claw back market share and solidify their position. But the Department of Justice stepped in, saying such a deal would violate antitrust laws, and a judge agreed. As a result, JetBlue pulled out of the merger agreement. This left Spirit on its own, without the strategic advantage it had hoped for, making its financial position even more precarious. Spirit even tried to revive merger talks with Frontier in October, but it didn't work out. They had even rejected a proposed takeover by fellow budget airline Frontier before their first bankruptcy, believing their own restructuring would offer more value for creditors. Talk about missed opportunities. Spirit has been bleeding money. They've lost nearly $257 million just between March and June of this year. Think about that for a second. That's $250 million gone in just a few months. The truth is, Spirit hasn't turned an annual profit since even before the pandemic hit. The company even warned just last month that it might not survive through the year without new funding. This isn't just a bump in the road, it's a fight for their very existence. They're negotiating with vendors and aircraft lessors and reassessing their fleet size, all in a desperate attempt to find a more stable footing. If you've booked a flow with Spirit, especially for the upcoming holidays, you need to pay close attention. These new, bigger cuts are hitting in November. That means passengers could face major disruptions during one of the busiest travel seasons of the year. Spirit has already canceled flights to 12 cities in October. These include places like Albuquerque, Birmingham, Boise, Chattanooga, Columbia, Portland, San Diego, Sacramento, and San Jose. If you live in or travel to those areas, those routes are simply vanishing. The airline hasn't yet said which additional routes will be cut in November, but expect it to be significant. The airline is trying to make tough calls to emerge stronger, but the short-term impact on travelers will be substantial. For those of you watching the stock market, Spirit Airlines stock under the ticker SAVEQ is currently trading at a very low price, about 47 cents a share. Wall Street analysts have a range of predictions, but the average target price, based on projections from 7 analysts, is about $1.70. That might sound like a huge jump, a potential increase of about 269% from today's price. And get this, one financial model, the GF value model, even suggests the stock could hit about $14.30 within a year. That would be an astonishing increase of almost 2,982% from the current price. However, the consensus recommendation from 10 brokerage firms right now is to underperform, meaning they don't expect it to do well. This is largely because when Spirit emerged from its first bankruptcy in March, creditors took ownership and all existing shares were wiped out, which really hurt ordinary investors. So if you're thinking about this stock, you absolutely need to proceed with extreme caution. This is a very risky situation with a history of wiping out shareholder value. So, there you have it. Spirit Airlines is facing an uphill battle, navigating its second bankruptcy with major flight and job cuts. This isn't just news for travelers, it's a sign of the immense pressures facing the airline industry, especially the budget carriers. Keep a close eye on your travel plans and any investments you might have in the airline sector. Things are moving fast. If this information helped you understand what's going on, hit that like button. Don't forget to subscribe for more direct, no-nonsense financial news and ring that bell icon so you never miss an update. Stay smart, stay safe, and I'll catch you next time.